Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and yes, I'm back from my rest and recreation, and today is Monday, and this is the 20th of August, 2012. The time right now about 3:40 in the afternoon. Quiet stock market, as you can see. Small rally in the bonds and the notes, and I think this is more short covering than anything. I'm not looking for trend changes in them, and I did notice several things when I was gone, and you just can't get away from it, especially if you stop watching markets like I try to do on a real vacation. And it's hard to stop. As the people that get my twice daily updates know, I did put some out. I just couldn't stay away from it. Here's what I think. Number one, the stock market's defied most market analysts. You're going up to 4.5, 5-year highs. September's normally not a great month in the stock market. We're right in front of the elections. I don't know. I think this market looks a little rich in the tooth. The bonds and the notes fell so much that this is more than a correction. I think this is a major top, barring some world element that comes out. But the world elements that come out may not drive those markets higher. We know about Europe, but we also know that there's movement afoot to do positive things, such as getting the ECB now to aggressively buy in the open market unlimited amounts of Spanish and Italian debt. Greece, still very much a wild card. They want more time, and they may not get it. So you don't know what Greece is going to do, but I'm not convinced Greece is forefront news anymore. Gold and silver and platinum. Platinum went crazy to the upside. All you need to do is, while the past week is going on, read about the strikes that are going on in Africa and other parts that are the world, basically, though, Africa, and to understand the strife, people dying, when will those mines get started again, and platinum takes off, but it's a thinly traded market. The copper market, which is an industrial metal, is not doing that well, but suddenly the silver broke away with the gold to the upside. We'll talk about that in the metal video. The euro getting a bit stronger. Maybe all this bad news has been digested. This is a chart this week of the September S&P, and this is going to be the Dow Jones, not the S&P. I had the S&P before I left. I'm showing you the channel the market is working in, and I don't think you can argue with that. And that pattern, I don't see anything yet bearish about it. That's without the lines that I drew for you, and I blew it up a little bit. And you can see the swing line. And the market's got a pattern clearly of each low is higher than a previous low, and now you're back into the higher high patterns. That's bullish. The market is far away from the 18-day average of closes, and this 18-day average of closes tonight jumped up where it's about even now with the last break low. I was hoping it would get a little bit over it, but it's there. Support is back at this break low is the important thing that I'm seeing in the chart. I'm also noticing that the 18-day average of closes is over the 45, and you can see you had a crossover here. And what's a crossover? This happened when the blue line went over the green, which is the 45-day average of closes going over the 100. That added upside movement to the market. Now, a lot of traders say, I don't know that that matters. I think it matters, and I think that those are crossovers that traditionalists that use moving averages watch. And now you got the short term over the medium term over the long term. That's all bullish. In terms of the Bollinger Band, well, they're starting to narrow in. They widened out. They saw the sideways action, and they'll pull in a little bit, but they're not especially narrow in any area there. So at 13,320, I would think that the market runs into some resistance, and I think support's back into the 13,000 range, 13,100 to be specific. Here's what I'd watch more than anything if I were you. Until you lose with the red number of this, because there's two, there's a brown and a red. When the red gets back under 80, I don't want to be long. Now, when I say I, that'll be via my twice daily recommendations. But I, via that scenario, would not be telling my customers to get into the market. Right now, any break, as long as this stays this way, is bullish. So the breaks will be, in my opinion, traps for those that are bears trying to pick a top. The trend of the market, I think, clearly up. When you go to the E-mini S&P, it's more of the same. You've got your embedded stochastic. Maybe you get to the 1426 level. I know there's a lot of talk in my office. We'll get back into the 1380s. Okay, so what? The trend is still up and this market's not looking bad at all. But it's almost like the whole presidential move has taken place now. And for those of you that are chartists and like to study, right here, right after the beginning of August, this outside day when you jumped the next day and took that day's high out, I've been talking to my subscribers and explaining how important this is. That's a major event when you see that, and the more I'm seeing this on charts, the more I become now, and I'm getting bolder in the sense that I'm looking when that occurs to get more and more bullish. And it doesn't matter the commodity. I don't care what it is. It's a chart pattern that's very important. In the NASDAQ, it's just more of the same. Embedded stochastic, sideways action that breaks out to higher highs, higher lows, over the 18-day average with this embedded. I don't know where the top is, but it looks bullish. And yes, while I was gone, there were some trades, and I had clients that were in the S&Ps, and I think they're very happy campers at this point. In the VIX, we're getting a little bit of a bounce. But is that bounce anything? I don't think so, and here's why. Again, you have your embedded stochastic, and in this case, instead of it being on the top numbers like we had in the stock indices, it's down here. What does that mean? It means the opposite. It means that the market is bearish on the VIX and that rallies in the market are noise until you get the red line back over 20. So the lower this number goes, the more bullish it is for stock market. The higher the number goes, in theory, that would be bearish the stock market. You're not getting that ratio happening just yet. As I move on and I start looking at bonds, this is what struck me when I came back. Slowly, this market was into the 152.5, 153 zone, and suddenly you're back down today pushing into the 145. That's not just a correction, in my opinion. There's much more to this, and it will take an awful lot, an event, to make the market, in my opinion, want to get back over that number. So I have to ask myself, have we seen the lows in real interest rates? And it's very possible at this point. As I look at the gasoline and the heating oil talk and the crude oil talk, I just wonder, you know, there's all this talk the president's going to release the reserve. Well, he might. It's a political year. He's got the reason to do it. And as you can see, you're sitting here, and this is the Brent crude, and not Brent, this is the WTI. Remember, just getting back, it's at $96. So you got to look at the spread difference. The market is acting still very bullish, embedded stochastic. You don't get embedded all the time, but it's summer, you've got thin markets, and that's what you're doing. So this chart's still very bullish. There's nothing that I see here that would make me want to run away. So as I look at the markets, you've got to understand where you're at. You're at August 20th. You're at the end of summer. Schools are just beginning in Chicago, but you can walk around the city. You can drive. You don't get the regular traffic. People are on vacation. I was in Miami, and I cannot tell you how many Europeans I was bumping into. They're everywhere, if you will. South Americans, of course, are everywhere at this time. But August, no, you can't get anything done. Not in Europe, because so many people go on vacation. If you go into the stores, as my wife loves, she was told, no, we can't get that for you. The stores in Europe are closed, or the manufacturers are closed, if you will, not the stores, until the beginning of September. Well, that's what you hear. And what do you think top traders are doing? See, you get to these markets that lose their volatility. And if you're watching the financial news stories, you're seeing that's the big story that I came back to. Where's the volatility in the market? Blah, blah. Believe me, it's waiting. It's going to come. You just need the traders to get back into place, and that's in the next week to 10 days. In the meantime, take advantage of our futures trading kit. It's free. While I was gone, I know we had up some of the different studies that we do. Over the next 3 weeks, we're going to start showing you the new software applications that we've put out. And these ads will change where we're able to show you some of the new things. And all we did is to use the word KISS with everything we've done. Keep it simple, stupid. I'll be the stupid one, okay? Which means sometimes as traders we get so advanced that we lose the basics. And if you think about it, you go to any trader, they're typically not using more than 4 or 5 tools, yet you go to these charting software packages and so on, they'll have 100 of them. You don't use most of them. Why have what you don't need? Or if it has it, nothing wrong with it, why display it? Why not keep your chart simpler and easy to use? And this is what we've done with all these applications in our trading kit. You got to try them out. It's free, 1-866-973-2077. Give my staff a call, and I'll see you tomorrow as I get more into the swing of things.